Hello and welcome to Scrolling with Ceazor. Today is February 26th, 2026. As usual, this is not financial advice. This is only just my own biased opinions based on the news that I found. Now, I'm going to be skipping tomorrow because I've got some power issues with my house. They're going to be shutting down the power tomorrow for some work and so forth. So yeah, I'm not going to be doing it tomorrow. So today is the last day of this week, and there's a lot of news here for you. Most of the timeline is flooded with Zach XBT's investigation report, and I will talk about that later today, later through this podcast. But let's first get into the charts and take a quick look at the ETH price and so forth. So ETH has kind of gone down a little bit, about 2 or 3% today. As you can see, Bitcoin's down about almost 2% as well. So it's the market kind of just correcting down a little bit as far as I'm concerned. I'm not going to make any changes to anything here. I did consider loading up more of my CDP when this pump came. I thought about it and I'm like, yeah, I'm going to wait until it goes up and comes back down and then starts going back up again before I mint more stablecoins versus ETH and put them to work. Okay. So like I said, I've got a lot to go through. Hopefully I can get through this before there's a talk I want to listen to with ETH Foundation and Trustless. I'll talk about that in a bit, but I don't think I'll be able to get this done before then, but I'll try my best. Okay, so let's move on to the first little tweet here. So we've got a Bitcoin maxi talking about how Vitalik has sold massive amounts of ETH recently. And Look on Chain says that it looks like he has completed his selling spree. He did talk about how he was going to use this money to fund more R&D. So that's what Gabriel LexNode is replying to him. He's like, yeah, exactly. He's done selling. He sold a bunch, and he's going to use it to fund more Ethereum research and development. So the point I'm trying to get at here is if it's true that he has finished selling off all his ETH, then it's quite possible that this little correction down is going to continue to go up again. I'm not sure, because people tend to not buy when Vitalik's selling, of course, right? But when he's finished selling, then it's only the open market, right? Selling or buying and so forth. Now, I'm not saying it's going to pump, because who knows who else is going to sell, right? And all that kind of stuff. But we can hope, and we can see what happens. Okay, so here we have a tweet by Starknet, which is pretty interesting. You can read through this whole thread and get more ideas into how this thing works. But basically, they have tokenized BTC with privacy. So that's very, very TLDR, right? But somehow on Starknet, you can mint BTC, like so probably, send BTC across some bridge, get this Starknet BTC, and this Starknet BTC has zero knowledge proof type privacy aspects to it. So I think this is newsworthy. I'm not a Bitcoin holder, really. I don't really use Bitcoin. I'm a ETH maxi for the most part, but I do think that this is an interesting use case for Starknet. Okay, so you can check it out. I'll link this tweet in the tweets in the tweet of this show. Okay, moving on. Okay, MetaMask has put out a Visa card for United States of America people, and you can get if you have MetaMask somehow. I don't know how this works, and I'm not going to look too deep, because I'm kind of like because I don't live in America, using a Visa card to pay for stuff becomes kind of cumbersome and problematic for tax purposes, because if I put assets into it, then I have to track the exchange rate of almost every single transaction, which is kind of a pain in the butt, right? So for me, it's much easier to just take my US dollars profits or payments and stuff like that, and just off ramp it into the fiat that I'm in Canada, everybody knows, so into Canadian dollars, right? So it's much easier to calculate for tax purposes, like that exchange rate, and then I also get to choose the exchange rate that I'm getting, and when to make that transaction and to maximize my my fiat, my forex exchange rate, right? So I find it a little bit easier. So I'm kind of not really too interested in this, but there are a lot of people in America who might want to use this, and I think it's great that MetaMask is kind of building out their product suite. We talked about this a little while ago on the show about how like products need to expand their utilities, their product offerings, to attract more people and to give people more, to make them more profitable companies. So EtherFi does it very well as well. I do have an EtherFi card, but I keep hesitating to use it. Another reason why I don't like to use my Ethernet card so much is because my government likes to protect me from yield, and so it's a pain. It's hard for me to use the Ethernet card to actually get yield. I found a kind of a workaround, like I can on-chain mint the yield-bearing US dollar coin and send it to my account, right? But it's kind of a pain. I can't actually open the account and trade that yield-bearing coin. So it's like, I think it's called liquid US dollar, right? And then again, I have that taxable, income, that taxable accounting crap that I have to deal with. So I'm kind of thinking about whether or not I should use it or what have you, and so forth. But let's keep going, okay? So I got 2 tweets about this today. So Justin Drake has dropped this like roadmap. They call it the straw map. A straw man roadmap for ETH protocol, ETH Foundation protocol. Believe in something, believe in ETH straw map, and it's pretty like heavy. And this guy here, Fed intern, he's like, amazing work. I'll be writing about this soon as I have some spare time. I'm bullish on everything ETH is doing. So if you're not following Fed, I would highly suggest you follow it, especially if you are an ETH person. And he's going to simplify this, make it readable and understandable, and kind of talk a little bit about all these little things that they're talking about, right? Now, another person here, Storm, I don't know who this person is, but I did this kind of made me want to follow him, so I'm following him, and his post, he's also retweeting Justin Drake's straw map, and he's like, how I would prioritize Ethereum's roadmap. So post quantum high, so quantum resilience, so make that a high. Fast L1, make that high, so make the thing faster. So we're still on, like, I believe 12-second blocks. Privacy is medium. I don't think privacy is necessary at the chain level either. I think we just need to support the privacy smart contracts that are already there. It's very easy to use, like, Railgun, or, well, maybe not Railgun because the user interface is a little bit wonky right now, but privacy pools and these kind of things to just wash. It just needs more users. We just need more people to use it, so then it obscures and obfuscates the transactions better, right? And there's a lot of token optionality in privacy pools now, so I think it's pretty good. I think it's enough. It's not 100% privacy, like obviously it doesn't compare to Monero, but it is still good enough in my opinion. And then he says Gigaglass on the L1 low, TerraGas on the L2s low. So he doesn't think we need more gas bigger blocks to allow for more complicated transactions or more transactions in a single block. I kind of disagree with him a little bit. I think privacy is lower on that list and Gigagas might be higher, but maybe Gigagas is a big lift and privacy is not. Now, he does have his reasoning, and you can read through his reasonings and decide what you think is important, okay? Moving on, here we have Emilio.eth. He's exposing someone, exposing things. So there's this Dragonfly thing I see once in a while. I haven't looked at what Dragonfly is, but they raised a whole bunch of money. It's got Hasib and this guy, Jose, and he's like, TIL, Key figures of Delphi Digital and Dragonfly are both involved in the same poker cheating scandal 15 years ago. Lore runs deep. So apparently these guys were doing some sort of poker cheating thing, and you can look at that deeper. And you always notice this in crypto, like so many of the rich people who are loud and on you see them, they got tons of money, they're all like just shady and crypto, like they're just shady grifters. And it's just maybe it's just because of the way X works and how drama gets amplified and true success kind of gets just undercut, right? There are some super rich people out in crypto who have brought us fantastic, wonderful products. And again, when they are shown even to be rich, they're shown in a dark light. Like a good example of this is Mitch from Curve. He's brought us several fantastic products, right? And he's buys a huge giant mansion, right? And everybody hates on him because he's like, look at this guy, he's so rich, he's buying a mansion, his token's down, blah 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 blah, right? So I guess it's just a product of X. People like drama, people like hate, people like to try to dunk on people. They don't like to praise people who for their good achievements. Now I don't know if these two guys have any good achievements. Like Delphi Digital is known to be useful by some people. I don't really use it myself, and Hasib, I don't know too much about him anyways, but you can dig a little bit deeper and find out if you're interested in like the poker cheating that these guys participated in. Okay, so Silo intern, he's talking about, he retweeted this Miko Ototoma, and I'll open up Miko's tweet as well because I think it's worth. But he's like, the barrier of entry for new chains is super high. So he's basically trying, like, retweeting and just saying, yeah, look at this thing. Like, look at how much it costs to open up a new chain. So people don't really know this, but it's quite expensive. Okay, so RPC integration. So Alchemy is $750,000 a year. QuickNode is $500,000 a year, and then you've got Layer 0 who wants almost $500,000, like $375K at one time. Hyperlane is $50K. Chainlink is $12 million for 3 years, or $4 million a year. Like, things get expensive. Like, if you want to run your own chain, it's not just like, oh, I just got to spin up I just got to do the coding and get it valid. And then this doesn't even talk about hardware and paying your devs and paying your team and all this kind of. This is just third-party like integration costs with some of these like major ones that most people use. And it doesn't even show like Etherscan and there's even more. Etherscan is $400K a year. So like it's a lot. There's a lot. You got to pay for a lot of stuff. So opening your own chain is not a cakewalk. Okay, it's serious big business. Okay, moving on. Here we have Alexander again. I talked quite extensively about his tweet yesterday, and here he is talking about sibling. So there's some guy on base, as you can see from this image. People are the Sybil attackers, this people who are looking for airdrops in a massive scale. They spread their money across many wallets, and they farm with those many wallets. They farm a few, like what they believe is the minimum requirement to get an airdrop, and that's kind of what he's doing. So he's like calling it. He's like, hey, Mr. Wallet, who has like spread your money across all these wallets, why don't you just consolidate back into one wallet? Come and farm on Aerodrome, supply some value, give back to the community by, providing liquidity to whatever it is you like to do, and stop being a Sybil attacker. Stop trying to game the game, right? Now, we're pretty, the industry is pretty good at seeing this, and this looks pretty, like, if Alexander is able to find this, now I assume he did not make this, someone shared it with him and he's KOLing it out. But if it's this easy to find this like this obvious like sibling, then either up your game, Sybil guys, or just bite the bullet. The Sybil attack game is over, and just provide some value, right? Moving on. Okay, so here we have the talk of Zach XBT. Okay, so here we have this is Pandora AI. I've got videos on that. I like this protocol. It's like permissionless. Anyone can create their own prediction market on this platform. And because Gnarl's like saying like, hey, look at this. Okay, so there is this prediction market on Polygon, and there was $25 million sitting in that contract. 1% fees, that's $250,000 worth of revenue. So if Zach XBT were to just he's like suggesting, if Zach created this market and he was the person who was getting these fees, then he would have just made $250,000, right, in fees, because he would have been like, hey, I'm going to expose someone. Here's a list of people who I might expose. Go trade, right? And as long as he doesn't participate in it, in the sense that long as he doesn't actually buy any of the yes/no tokens, then I would say morally it's not a bad thing, right? He would be reducing the list to the amount of markets he opens. And the key thing, on Pandora, you can't do multi yes or no's like on Polymarket, where there are 7 options in one question. He would have to make several questions, like, will it be this, yes or no? Will it be Axiom, yes or no? Will it be Polymarket, yes or no? Right? And then he'd have to make all those, and then all of those things would get traded, and he would make the fees from all of those different markets. But he could very easily do so. And maybe he's going to do it. Maybe he doesn't want to do it, because there is it's a little bit grifty, but not terrible, right? It's not insider trading. He's not cheating, right? So I think he could consider this. So it is an option, okay? Now, I'm going to open up, where is Zach XBT's? Yeah, here it is. So here is Zach XBT's actual expose, right? He exposed this guy, this insider called Bronx, who was using Axiom's information to basically copy trade scammy KOLs, right? So there were the scammy KOLs who would use multiple wallets to buy up, to what we call fill and shill, right? Buy up a good amount of the same coin, and then he would use his KOL account to shill it, pump all those things, and then dump with all those private wallets, right? So what the Axiom guy was able to do was he was able to see all of those private wallets through, somehow the person was, connected them to Axiom. So somehow Axiom was able to connect those. And then this guy Bronx was like able to see that, these specific KOLs were filling, and they were likely going to start shilling. So he would fill as well, right? And then after the KOL started shilling, he would be this guy Bronx would probably be dumping. So that's the game as I understand it. There's some intricacies here. So it is insider trading because he had information that was privileged to him because he had access to the Axiom exchange, right? But like, I don't really think this is like the worst kind of insider trading. Like, it's not like he was like sandwich attacking trades that were happening on in the system, the Axiom system. It's not like he was, he was listening to conversations between founders and making trades based on that. And so I feel like it's okay. It's not so bad. Like, you if you do scroll through it, you can dig deeper. Like, it's thorough, right? And so forth. But you do see that, like, He says, I was retained to independently investigate alleged misconduct at Axiom. So someone hired Zach to do this. So Zach did this. Okay. So it's not really, I don't think Zach felt like this was, his best work, so to speak, or even maybe, I'm not going to say not worth his time, because it's still insider trading. It's still bad. This guy was still doing something, but like, it was like, he was like scamming. This Bronx guy was like just participating in the same thing the KOL was doing. So the KOLs, in my opinion, are even worse than Bronx. Bronx just knew what the KOLs were going to do. The fill and shill is actually worse than the knowing the fill and shill's happening and trading it. If that makes sense. They're both bad. They're both terrible, right? People are losing money, and these guys are taking it, right? But the best way to do it is, like, I saw someone, I forgot, I lost the tweet. Oh, it was Romano. Let's see if I can find it. I probably won't be able to find it. Let's quickly. Yeah, anyway, so Romano says, like, just don't trust Rominio, guys. And it's like it's not really the problem here. Like, I would say just get out of the trenches, right? Don't buy something that is a 1 or 2 day trade. Buy things. You can trade you can day trade with perps on blue chips and stuff like this. Leverage. You can do this if that's something you want. But I think it's more better to just buy invest in things. Don't just gamble away on meme coins and trenches and stuff like that. But anyways, that's kind of my take on this thing. I do think Zach is fantastic in that he does this kind of stuff, and he's helping out the ecosystem. But I don't think this is his best work, if that makes sense to you. But anyways, that's my little 2 cents on this. Let's move on. So here is an old meme that came out. I remember this a little while ago, and then here it is again. And it's just the classic Seinfeld, do you yearn? And he's like, yes, I yearn. It's you can watch this little video. It's nice. If you don't know Seinfeld, then you won't find it to be very enjoyable. But if you're like me and you watched the whole Seinfeld, then you will enjoy it a little bit more. But the point of this tweet from Yearn is that they have created a new front end. And you can go to the Yearn front end. It looks quite different. I'll open it up here, and you can kind of see that it has some different looks. It looks a little different if you open up a vault. So I'll just maybe open this one here. You can get a lot of information. It's quite clean, and you can see where your stuff is going and stuff. And I'm always a big fan, and I'm always happy to share Yearn stuff. Moving on. I got 2 tweets here from Paper Imperium, and they're both talking about the Genius Act and stablecoins. So this first one here, he's talking about, let me read what he says, and then I got some clarification from him. Okay, so he says, sure looks like the proposed rules here would end up that the current practice of payment stablecoin issuers paying a platform and then the platform paying its users is going to stop. Okay, so I asked, can you explain to me what this means? Give me an example of the current practice. And basically, he did reply, and I don't know why it's not showing here. I have to probably refresh, and anyhow, but so it's like, USDC or no, I'm gonna actually open it up so you can see his reply to me. And here it is. Okay, so CEXs, centralized exchanges, giving users rewards in their stables, while the issuer gives the CEX a share of the interest earned by the underlying T-bills. So you see this. If you go to centralized exchanges, they now pay you to hold certain stable coins. Usually it's USDC, and where is this money coming from? It's coming from Circle. So Circle's giving Coinbase part of their yield, and Coinbase is giving that yield to the users. This is something that the Genius Act apparently might stop, because it's like insider stuff. It's not It's just like middlemanning things, right? And I replied like, well, so maybe we should just do shit on chain like we're supposed to, right? And then make it immutable, and then there's no like little backroom deals. There's no like business is business, right? But anyways, so there's that. And then he takes this a little further, and he talks about Sky ecosystem with this same idea, okay? So he says, like, let's take a look at this. So currently, Coinbase pays Maker and Sky for the privilege of custodying $4 billion in USDC. So there is $4 billion of USDC or more backing Sky's ecosystem's USDS, right? That USDC is not sitting idle on chain. It's actually sitting in Coinbase's wallets, and Coinbase is paying Maker for that liquidity. But, okay, why? Because Circle pays Coinbase for having USDC on the platform. So then Circle looks and says, oh, look, you've got $4 billion worth of our coin. Here's some of our yield. So that might screw with Sky Ecosystem's business model as well if this Genius Act closes this down. And I think this is significant. I'm not a huge whale, so I'm not too worried about that like this screwing up my positions, because I mentioned many times I tend to use USD as my interest-bearing stablecoin in my liquidity positions, but these are short-term and I can easily get out of them and so forth. But it's still interesting thought. Will this Genius Act start screwing up these business models that are in place already? And it's very unlikely. The banks don't like it because why would I put my money in your bank when I can put it here and get more yield, and then I can also trade it and stuff like that. So anyway, so you can check this out, dig a little bit deeper. Okay, so look on chain. Okay, so this is more about Zach XBT. Zach is kind of just, I should have talked about this before. This is the guy who was the insider, and basically it's pretty crazy. So the insider possibly could be the same guy who was insider trading, bet on Polymarket that Axiom would be exposed, and won. So he insider traded. So it's pretty crazy stuff. It's a crazy world we're living in. So he was insider trading on Axiom, and then he saw this Polymarket thing, and he knew that he was insider trading, and and then he bet that he would be exposed. So he's betting that Zach is going to expose him for insider trading. Now, I don't really consider that to be insider trading because he doesn't really know who Zach is going to expose. But he does know the odds are pretty good because he's the one doing the insider trading. So I think that's pretty cool and pretty funny and so forth. But yeah, he turned $65,000 into $400,000 by betting on this prediction market. Anyhow, moving on. Sam from Rise, he says this is diabolical. It's just more of this kind of stuff. I found this to be interesting, but I think I've already talked enough about this. If you do want to know what Axiom is, it's kind of like a hub, a trading, like all of DeFi. It does say that it is decentralized, so it's apparently all on chain. I've never used Axiom, but it's kind of like one of those like easy to use DeFi. Perps, everything trading all in one little place. Just sign up, give us your name, give us your wallet, and all this kind of stuff. So you can check it out if this is something you want to do. I never used this. I didn't even know about it until today, and I don't plan on ever using these kinds of things really. Okay, so let's moving on. So here we have FX protocol and liquidity and ETH Foundation. It's currently live right now, and I really want to watch this, so I want to kind of end this show as soon as possible because it's currently live now. And I do think you should check this out and and find out more about the trustless force, which is stable, like basically it's Curve, Liquidity, and FX protocol, and probably more in the future. And these are stable coins that are on chain, for the most part immutable, permissionless, unstoppable, and not contaminated with centralized entities and stuff. So anyhow, there's that. So I got a couple more. So Ramses is just reminding you, if you're not using the AutoVolt or HyperRAM, then you have to vote every week. So consider using AutoVolts and HyperRAM. I like these AutoVolts. These AutoVolts are very good for me. Moving on. So here's the tweet for the trustless force, which I'm going to kind of hop in as soon as I can stop talking. And then the last one today, as always, I want to talk about something outside of crypto. The CEO of the World Economic Forum has resigned, thanks to Thomas Massie, who has connected him to Epstein. We keep seeing more and more and more and more and more of these powerful people in powerful positions being connected to Epstein, and the connections are endless. It's quite crazy. I saw JP Reacts yesterday talking about Leslie Wesner, and he was like doing his deposition, and he was pretending to be surprised that millions and millions of dollars Epstein had gotten paid from Leslie, and so as a co-conspirator. So yeah, I don't want to dwell too much on this, because if politics is just rampant in the space, X will feed you as much of this as possible. But I do think it's nice and interesting to see the World Economic Forum CEO resigning because of this connection. Like it's the swamp, as we say. So that's it for today. Hope this has been interesting and useful. I'm gonna quickly swing over here and start listening to this while my video gets fixed and so forth. So anyhow, thanks for watching, and goodbye.